No, I'm going to explain to you real quick.
Continue walking.
But don't be rolling out. There's a reason for it.
So I did get that right. You got it right.
Can you give the audience that doesn't know you a little, just maybe a 1-minute blurb about your background?
Sure. Well, thanks very much for having me, everyone. Todd, it's a pleasure to meet you. I love what you guys are doing. Very quickly, Greg Foss, 58 years old, went to McGill Engineering Montreal, 4 years, knew I didn't want to be an engineer after about 2 weeks, but loved the mathematics and the challenge of problem solving. I was at McGill to play sports. In my 4th year, when all that was done, I luckily applied to an MBA program in the USA and was accepted. I wouldn't have been accepted if I was an American, but at Cornell University to pursue an MBA. And after 2 years of MBA, I became essentially a financial engineer. I came back to Canada and I became a risk trader, a credit risk trader for 30 years. I tend to focus all my investments starting with a credit lens because credit is the most important component of the capital structure. Credit is a far bigger market than equities, and anyone who invests in equities without understanding the credit markets is going to get their heads handed to them. So Bitcoin, very quickly, and I retired in 2016 and was from the hedge fund business after the great financial crisis, and one of the greatest trades I'd ever been partner with was complete. I retired and was introduced to Bitcoin. I've been studying Bitcoin for the last 5 years, and I believe it to be the best asymmetric trade and investment opportunity I've ever seen in 35 years of managing risk. Bitcoin, quite simply, will revolutionize the world. And it's necessary because the Fiat Ponzi is going to destroy the world if we don't start taking control of our own destiny.
Wow. I can tell we're going to be friends for a long time, you and I. Let me ask you a question. We're going to diverge a little bit because of your background in credit, and I have a background in equities. I run, obviously, a hedge fund that has an equity component where I'm an activist investor. We mine Bitcoin. I think we are mining now at this point. We have 20,600 miners on order. We've taken delivery of 1,895, plus our old portfolio of S9s, which we're going to divest. We've been at it for a while. We made a lot of mistakes. What are your thoughts, because of your credit background, on I saw a recent, I think it's called Lendy or something, where they're taking Bitcoin and they're creating a mortgage company out of it. I have been pretty fascinated with the blockchain and the idea that the crypto we're mining could turn into the ability for us to lend out. And I wondered if you could kind of structure in your mind for me or explain to me how you would use a smart contract over Bitcoin and having Bitcoin backed a lending program that would make sense. I mean, just in your own sort of like for a layman.
Well, great question. Wow. What a way to start. Okay. Well, let's jump right down that rabbit hole per se. Listen, Bitcoin is the most pristine form of collateral ever created by man. And as a form of collateral that is auditable, verifiable, portable, transferable, Bitcoin as collateral in any lending relationship, including a prime brokerage lending relationship where a hedge fund like yourself needs to pledge securities against their long and short positions. Bitcoin, quite simply, is the most perfect, pristine collateral ever created. When you have the perfect collateral, you have lending relationships that make it a lot more easy to monitor your true risk. You don't get things like Archegos Capital, which had 5 prime broker relationships and turned out that they were leveraging those relationships to the tune of 50 times bet using the capital of the prime broker. You remember Archegos Capital? They had positions in Discovery.
I am incredibly.
Network. They had positions in Viacom. What a mess. What a disaster. Once again, an example of why the old financial system doesn't work, because the systems don't talk to each other. what my credit background, though, is really on a risk basis in terms of Bitcoin as being protection, though. And this is important, Todd, protection against the unraveling of the fiat system. It's going to happen because it's happening today in Turkey. And Turkey is a G20 country. And as much as I love Canada, Canada is a G7 nation, just barely. But Canada will be the first G7 nation of the other 6 nations to default. Canada is a fringe economy based on the USA. It is horizontally integrated, is not vertically integrated like the USA is. And most importantly, it has a GDP slightly smaller than the state of California. Yet it is a G7 country that is currently being run by a politician who says stuff like, the budget will balance itself, and I don't care about monetary policy. Well, those are very dangerous words that the credit default swap market is taking to heart and already charging an insurance premium on Canada that does not reflect its AAA credit rating. It more appropriately reflects a single A credit rating. This is very dangerous for Canada. We are just a few steps away of becoming a South Africa, and then a few steps away from that of becoming a Turkey. Things unravel, and when I say a Turkey, I mean the country of Turkey. At the end of the day, things in credit unravel very quickly, and you need insurance against that. And Bitcoin, in my opinion, is actually it's insurance on a basket of fiat currencies. And you can actually measure the value, the intrinsic value of Bitcoin using these credit default swap contracts. I don't want to get too technical, but the truth is Bitcoin is, from my perspective as a credit trader, insurance. It is collateral. Yes, in a lending relationship, but more importantly, it can be used as insurance in any portfolio that has exposure to fiat contracts, i.e. bonds, or fiat debasement. Well, every other asset in the world, because fiat is debasing, that is 100% certain.
Okay, so let's say you had $100 million worth of Bitcoin and you wanted to lend that money to a series of public companies that trade on an exchange. They're obviously going to pay you back in fiat currency. The scenario here is that you have Bitcoin. Are you using that collateral to borrow fiat and then lending the fiat and letting them pay it back? Or are you denominating the loan in Bitcoin and they have to repay it in Bitcoin? Because this is where I get lost, because
Sure.
I don't have the mind you do. I didn't go to Cornell. I'm being serious, actually, not even being a smartass at all. What, in your mind, how are you lending that money out? You have 100 million of Bitcoin. So in our case, we're going to be mining, we believe, around 250 to 300 million of Bitcoin a year, right? And let's just say, for argument's sake, it's 300 million. And we're putting together a structure to create a $100 million lending fund backed by Bitcoin. But would you have the creditor pay back in Bitcoin or fiat currency?
In my opinion, you'd have them pay back in Bitcoin, but every contract is individual, right? Let's flip it on its ear from a borrower's perspective. The borrower would want to pay back in fiat because fiat is a debasing asset. So if you borrow $100 over 10 years, you can pay that $100 back, the principal amount. But in 10 years, that $100 has the purchasing power of probably $65 of the original time zero amount, right? So, I mean, you need to structure these credit agreements according to what your desired accomplishment is. You're going to be mining a lot of Bitcoin. Let's look at some other publicly traded, and I'm not saying you're publicly traded.
We are. We're publicly traded on the New York American.
Willie told me that. I didn't want to dox you or whatever. I mean, I guess your listeners know that. But the key thing is the market right now is paying for Bitcoin on the balance sheet, because a lot of big funds, as strange as it is, cannot actually own the underlying Bitcoin, but want to get Bitcoin's exposure by owning the equity of a certain company, right? So MicroStrategy, HUD 8, Full disclosure, my company has a relationship with Hut 8. At the end of the day, all of these can be structured in various ways, Todd. I'd be happy to talk to you offline about these. I haven't perhaps taken the degree of wanting to lend out the Bitcoin like you have. My personal opinion is I want to borrow as much fiat as I can, much like Michael Saylor has done.
Sure.
You borrow in fiat to buy more Bitcoin. Now, if you're creating the Bitcoin as a miner, you want to save the Bitcoin. You can use it as collateral to lend out. I'd rather get Bitcoin back as payment on an interest coupon paid in Bitcoin rather than fiat, for sure.
I'm with you. I think the difference is we lend out in fiat. We get paid back in either fiat with a big premium or stock. And as long as that stock has a spread, then
ship it in, right?
Right,
Great
ship
trade.
it in. Right, exactly.
Great trade, ship it in.
Hey, Jason, what do you think of what you've heard so far? Now, Greg, this is one of our directors of business development and been involved with me for a long time. And he has really helped the relationship with Bitmain. We were just in Dubai where we bought these green miners, these 140 terahash green miners that are more efficient, and taking delivery of those in July. I don't know that I've ever spent so much money in my life in such a short period of time to get product on a delayed basis. I think we've written.
Bitmain has the keys to the keys to the Magic City, don't they? Our company is dealing with some similar issues, that tide will change over time. But well done. I applaud what you're doing. I think it's great for North America. I think it's great for the children of North America, and that's the most important thing, right? So yeah, I look forward to your questions, Jason. It's really neat how actually symbiotic we are in our business pursuits right now. You mentioned you're buying thousands of miners. We're doing the same. We're going to have close to 400 megawatts of mining online in over a period of 12 months. This is really exceptionally good for North America, in my opinion. Some of the politicians don't quite understand it yet, but together perhaps we'll be able to educate these people as to why it's so good for the future of our respective countries.
Yeah, we have a mining operation in Michigan. We bought a data center, 617,000 square foot on 34 and a half acres, nuclear powered. I know I don't say that right all the time. And we'll go to 300 megawatts there. Jason, what are your thoughts so far about Greg?
Well, Greg, pleasure to meet you. I was listening in and watching the other YouTube show you were on with Dr. Jeff and Joe from Hearsay Financial and Michael Schmidt and BTC Sessions. And I actually was checking out your Twitter, and I made a little comment in the chat there during your other YouTube program about, excuse me if I mispronounce it, Validus Power Corporation. I said, hey, Greg, can you spare me 50 megawatts? So I was very, very excited to see that the synergy here is massive. And your history of everything in the financial sector, I was like, I can't believe I have yet to come across your social media stuff and everything that you're speaking about. And I reached out to one of our business partners who actually is in Manitoba. And I said, hey, do you know Greg Foss? I said, this guy's an incredible guy, and he's a Leaf. He's from north of the border. And I was surprised that he hadn't heard of you. But then again, I think you're in Ontario, right?
Correct.
Okay. So that makes sense that he's out in the wilderness in prairie land, and he's got some of that clean hydro up there in Manitoba as well. So very excited to meet you. I wanted to get your take on silver and gold and copper. And I follow Keith Neumeyer from First Majestic Silver, who's in BC. He's a very smart guy. We're in Las Vegas. Well, I'm in Florida now. Pardon my scenery here. I'm in my parents' spare bedroom, so I'm just kind of makeshift. But Keith is in British Columbia. He's in Mexico. He's got some issues with Mexico, with the government there's some taxation issues for a lot of the miners, junior miners. And so there's some core battles there. But now he's in friendly jurisdiction here in Nevada. He took over the Sprott property there. It's Jarrett Canyon. Oh. And that's a gold mine And now First Majestic was actually a pure play on silver bullion before, but now he's diversifying. He's got about a 60-40 split now, 40% gold mining. And I just wanted to get your take on, I always see this back and forth with like Peter Schiff on Twitter. There's wars with Saylor. And I just wanted to get your thoughts on what you think about the silver, gold, copper industry and any alignment with Bitcoin and the crypto space, and how you see it playing out over the next like 10 years or so.
Let's be honest. A guy like Peter Schiff, who I have respect for, I have debated him on a podcast. Peter Schiff understood the beauty of Bitcoin way before most people, and yet chose not to put 1% of his portfolio into Bitcoin, unfortunately, and would have been up tenfold. His entire portfolio would be up 10 times if he had just put 1% in Bitcoin when he first understood the beauty of Bitcoin. But he was somewhat, let's just say he didn't want it to succeed because he viewed it as a challenge to his gold business. People who are Austrian economists or economics majors, they understand hard money. What is the worst money there is? Fiat money. Any asset that is harder than fiat, you need to own as opposed to owning fiat. The second worst is bonds. Bonds are only a fiat contract. We talked a little bit about that, but a fiat contract is programmed to debase over time. So gold, silver, copper, hard assets are all better than fiat cash, okay? Now, I just happen to believe that Bitcoin is the best hard asset, but I can't be 100% certain about that, okay? You never know the challenges that could come up. I, therefore, do own some gold. I do own some silver. I don't have huge exposure, direct exposure to copper, but I do own some copper equities. At the end of the day, all of these are better than owning either bonds or straight fiat cash. Real estate's another example of a hard asset that you should have exposure to, because very few true risk managers can go 100% in on any trade. I would never be, for my clients in my past life, I could never go 100% in on Bitcoin, and I don't manage my personal portfolio that way, even though I'm highly confident that Bitcoin's going to win the race. I'm still betting on a trifecta. I can bet on 3 horses to come in 1, 2, 3, 2, 3, 1, 3, 2, 1. You know the story. Bitcoin, in my opinion, is the best horse at the race, but I'm not certain that it will win the race. All of these other assets are important in a diversified portfolio of hard assets against the only thing I am certain of, and this is mathematics, that fiat currencies will continue to debase. The reason that fiat currencies will continue to debase, very simply, is because the debt load that we have now generated globally will grow organically due to the interest coupon faster than the economy can keep pace. Pure mathematics, we are certain to lose purchasing power in every single fiat currency that's out there. So therefore, you better own hard assets. An interesting sidelight would be, can you imagine if a gold miner with excess power actually starts to mine Bitcoin as a hedge to their business?
Hey, you don't get to steal that from me, man. Come on.
Well, I haven't heard you say that, Todd.
I'm just kidding. I'm teasing you, Greg. I'm teasing you.
Okay, so I'm in touch with this guy. You mentioned these other good gold investors. Do you guys know who Lawrence Lepard is? Larry Lepard from Boston. He runs a gold fund, but he has gone into Bitcoin and views Bitcoin as a complement to his hard money thesis and gold exposure, as well as gold equity exposure. He's a large holder in a company called IM Gold. IMG is the ticker. We have a relationship with IMG in Canada, and I think it would be a wonderful strategic advantage if IMG use some of their excess power in the off season when they're not using it to mine Bitcoin.
It's just
it would complement their business. Now, it may be heresy to propose that, but I don't think so. And I think in 10 years, we might be talking a different story. So I guess to answer your question succinctly, we're all rowing in the same direction. Okay. Michael Saylor's very adamant against gold. I don't hold that same disrespect for gold. It's like the gold guys have understood this for many, many years. Now they just happen, some of them might be conflicted and don't want to admit that there could be a better horse at the race. But the smart ones say, dang, I'm not certain which one's going to win, and I'm going to allocate capital accordingly. And I often say, look, I'm only about 40 or 50% confident that Bitcoin gets to my price target, which is substantially higher than where it trades. But even that 40 or 50% confidence is not 100% confident. Therefore, I can't go 100% into one trade.
What are you thinking that Bitcoin gets to?
Well, right now, I think Bitcoin is worth $2 million US a Bitcoin in today's dollars. So over time, as the value of today's dollars gets debased, in today's dollars, I think Bitcoin goes to $2 million or higher. That's my price target. I can explain how I get there quite simply. But essentially, I then put a probability weighting on that price target and have my my portfolio set up according to that probability.
Are you so if you think about the world's millionaires, there's 49 million of them, right? There's only 21 million Bitcoin. That wouldn't even be one Bitcoin per person at $1 million of Bitcoin, right? Am I
interesting way of looking at it, Todd? The way I get there is really like this. I look at the total global financial assets. Mm-hmm. And by my math, using Institute of International Finance numbers, total global financial assets are over US $900 trillion. Now that includes all real estate and all debt, all equities, all gold, all fine art, all commodities, all currencies, 900 trillion US dollars. And I have a thesis that Bitcoin will become the reserve asset of the world. Why? Because I think over time, a smart energy country like Russia, Vlad Putin, probably wants to receive Bitcoin in trade for his valuable natural resources over receiving worthless and debasing US dollar fiat. So imagine if Bitcoin becomes the standard for pricing energy. Is it logical at that point to think that Bitcoin could become the reserve asset of the world? If it becomes the reserve asset of the world, which I think it will, I say it will get 5% of the total addressable financial assets in the world. That's not a big number. I think it could be substantially higher than 5%, but walk through the math with me. 5% on 900 trillion US dollars in today's dollars is $45 trillion. $45 trillion divided by 21 million Bitcoin is over $2 million per Bitcoin. Then I put a probability distribution on that, and I get a weighted expected value of Bitcoin. And I'll tell you, 5% is a low number. What if it goes to 20%? Well, you just take that number and multiply it by 4, and you get $8 million of Bitcoin in today's dollars.
We're aligned. We are big time here. We have decided with our company, we renamed it from my own name, Ault Global Holdings, to BitNile Holdings. We have committed $160 million in miners. We've already wired $70 million to Bitmain. We have financing for the rest of them that is non-dilutive, and we're separating all my holding company assets into a separate holding company that owns our real estate and all the sort of, fiat-based, boring, collect the dividend, collect the free cash flow. And what we're planning on doing is taking the Bitcoin we mine and creating a leverage situation where we use fiat to borrow against it to then get those fiat dollars back to do more mining, leverage up that balance sheet a little bit, backed by Bitcoin. So we hope to be a backed by Bitcoin company with those assets and use them to fund existing public companies that need capital and sort of, scrape that margin. I'm
top of the funnel stuff. Okay, so my vision for the future is this, and sorry if I jumped on top of you. The biggest problem with Bitcoin miners is they truthfully don't understand the energy markets, okay? And that's the biggest problem with the publicly traded miners is they don't understand the power purchase agreements. Some of them have signed are, very unreliable. And by the way, you can get tariffed off the grid. You've seen this in Quebec where Hydro-Quebec has driven out some of the Bitcoin miners from Quebec because they tariffed them to the equivalent of 12 or 13 cents kilowatt hour. Yeah. The world is at the bottom of the funnel is your natural resource energy. That's about a $50 trillion or $20 trillion opportunity. Okay. 20 trillion is energy. You have your Bitcoin miners, which are about a $1 trillion opportunity. Not even, but I'm just giving it, if Bitcoin's worth $1 trillion and maybe the Bitcoin mining community, private plus public, maybe worth $1 trillion. I don't even think it's close, but stick with me. You got 20 trillion, 1 trillion, and then you have the funnel at the top, which is going to disintermediate the world. It's going to be the platforms for lending, for custody, for Bitcoin ETFs, for layer 3 applications of Bitcoin, smart contracts, stacks, all the things that are being built on Bitcoin. Wouldn't it be cool if you had a vertical slice of that as an investor? Because Bitcoin mining as a standalone business, in my opinion, is difficult. You don't control your input costs, which are energy, and you don't control your distribution, which is your revenue. At the end of the day, having a vertical slice of that could be a pretty attractive publicly traded instrument. And I think that's where the world is going. And it's going to be exciting for our two companies because I think we're going to be right on the cusp of doing those things. We also have written some sizable checks to the Bitmains of the world to ensure the supply of next generation machines and ASICs. This is good for our world, Todd. Why? Because we need to do this for the security of our countries and the future of our children. I am completely fascinated to talk to someone that's so aligned with myself. I'm almost speechless. One thing I wanted to mention, and I love what you're going to say, is you're going to rewrite the rules of capital markets, okay? Michael Saylor, and I challenged him on this on a Twitter Spaces call. I tried to ask him, at what point would he not have borrowed in fiat dollars? What coupon on his high yield debt would he not have borrowed at? Meaning, what point would the coupon have been too high for him to say, it doesn't justify my borrowing hundreds of millions of dollars to basically buy more Bitcoin? And he didn't directly answer the question, but the reality was the market gave him a coupon of 6 1/8, and I'm highly confident he still would have done the trade at a 10% coupon. Okay, even when the high yield market itself overall was yielding only 4%. Now, he probably wouldn't have been able to issue at 10% because it might have signaled to the market that he was desperate for money. And he didn't want to do that, and his investment bankers would have advised him not to do it. But the point is, the high yield market thought they were getting a great deal by lending to him at 6 1/8%. And he thought he was just ripping the eyes out of the high yield market. And my bet is he got the better side of the trade. Okay?
Oh, we would agree.
Oh, yeah.
We would agree for sure. One of the things that I'm looking at, we have a lender, Digital Power Lending. We're a licensed lender in California. And so what we're trying to do is think about what it would look like for us to securitize those Bitcoin, borrow in fiat, lend in fiat, get the spread, but have the asset backed by Bitcoin, which we think will be an appreciating asset, right? And then
top of the funnel, I forgot to mention, top of the funnel is worth $100 trillion. Okay, 20 trillion, 1 trillion, 100 trillion. Where do you want to spend your time, sir?
This will be officially my favorite podcast I've ever done. And I've done some cool podcasts. This is really fascinating. So what about flare gas and stuff like that? I look at we're the largest owner of a steel company in Longview, Texas, and they're publicly traded. We're the largest single shareholder. We don't have control of the company, but I know they have a lot of input costs in terms of what it costs for power to bend that steel and to do what they're doing. And I look at things like Exxon and all these companies that are flaring gas. Why are the traditional oil companies not mining? Why are they not going, you know what, we're burning all this gas out here. let's just turn that into a controllable energy that we don't have to burn in the environment and get something out of it. I'm curious as your thoughts on why that's not happening.
Okay, so old money, old time thinkers. The companies are being run by CEOs that are very set in their ways. They have no idea what Bitcoin is. They want to stay in their lane. Let's be very clear. There is not a lot of flare gas opportunity in Canada. There's more flare gas opportunity in the USA, but all of the flare gas really on a global scale is in the Middle East, okay? So why don't these companies do it? I believe they're going to do it. And we actually have the technology that we can sell them where we have mobile turbines, 35 megawatt turbines that get shipped in on a trailer truck with a fuel conditioning skid at the front end that makes sure you're not running dirty natural gas through your beautiful, pristine turbine. And then we have the miners and the Starlink at the top, at the back end, and we can wheel this fleet into any flare gas supply and be up and running in 16 hours.
You hear that,
16
Jason?
hours.
Jason, you hear that? He said Starlink. So he's that low level satellite system he could mine on. That's a very interesting idea. Wow.
So, but here's the truth: any source of stranded or wasted energy is a candidate to mine Bitcoin, including wasted energy sources like at a gold mine where they have gas or they have generating capacity for winter versus summer. What about in a greenhouse where they have greenhouses that need to be heated in the winter in Canada, but in the summer they don't need the heat, and you have this valuable resource of generator, whether it's diesel or, in our opinion, we like the natural gas much better. You can be mining Bitcoin on a sporadic basis. Bitcoin does not differentiate whether you are a full-time miner or not. If you're on the network, if you have your power allocated to the network, you will gain your appropriate share of the Bitcoin rewards that period. You know that. I don't need to tell you that, but I'm saying that for the benefit of the listener. But imagine the Exxons of the world that are flaring this wasted energy. And you could propose a system to them where they could take that flared gas, you either flare it or you let it vent into the atmosphere. If you vent it into the atmosphere, it destroys the ozone. If you flare it, there's an argument that venting is something at least 10 times worse for the environment than flaring, but a lot of natural gas is just vented. You capture this stuff, you mine Bitcoin, you create a revenue source off of this wasted energy. And guess what? Yeah, you're cleaning the environment. Wow, that blows our minds. It blows the minds of people that see our mobile turbines, 35 megawatt turbines. Imagine if you are a remote community in northern Canada, and I'll even throw out if you're an Indian reserve. Wow, you can power your greenhouses, you can mine Bitcoin, you can capture the heat of the Bitcoin miners, put them into your greenhouse. Holy moly, you are changing entire communities with the beauty of being able to mine Bitcoin.
Has there ever been a time that you know of? I'm a student of history. I haven't been able to find it, but maybe there was moments in time where currencies weren't being debased. I'm just curious as to you're a scholar here, have an MBA, know the credit markets. Is there ever a time where it was smart to? I remember, and let me give you some little background to this question. I remember when I was younger, Mick Jagger and the Rolling Stones were on tour, and Mick Jagger, a smart guy, said, "Hey, I want to get paid in Japanese yen. I'm not going to take U.S. currency." And that was the first time I ever thought to myself, wow, really? You don't want to be paid in U.S. dollars? You want to be paid in yen? And I know the yen was strong back then. And he made a spread. It was better when he converted that currency back over. He got more U.S. dollars. That was really my first exposure to understanding. And then I had a friend of mine who was from Zimbabwe. And she said to me, you cannot imagine the black market, what it meant to have a Zimbabwe dollar and what they really were converting for and how terrible it was. And eventually she had a $5 billion note, $5 billion Zimbabwe dollars or whatever they were called. And she used to say to me, I'm not joking around when I say this. I really am not kidding. She said, your wealth was determined by how many cows you had, cattle.
Right.
And so we wanted to be paid in cattle. We didn't want to be paid in currency. My kids don't want me to give them money. I literally, if I gave them $1, like I gave them $100 bill, they'd say, can you just Venmo me? I don't even know if they would spend it. I mean, what do they do with it? You know, they're not off going to 7-Eleven like I was as a kid, getting some, taffy or some sort of candy or something like a Payday bar and a Slurpee. They're doing something else with it. They're using their digital currency to buy FIFA credits because they play online on a game, or they want the currency to do something else. Their whole world is digital. Has there ever been a time where owning fiat made sense at all, ever in the history of mankind?
Absolutely, but it was about 100 years ago. And so I want to answer your question from present back to history. So isn't it interesting, when I graduated from engineering in 1986, I had never used a personal computer, not because they didn't exist. They were just very new technology, but they didn't exist for regular university students. And now university students are using an iPhone that has more power than was required to put 2 men on the moon in 1969, a year that I was alive in, and I remember the lunar landing. Kids are just different than my generation, and that's going to be the way it is. And yeah, they will accept, fiat money. You can have a central bank digital currency that is still fiat. It's just not paper money per se. It's controlled by the central bank and it's digital. And by the way, a central bank digital currency in China is going to be used for tracking as well. Oh, you were at a rally that was non-communist, were you? Because I saw you spent your money at a restaurant that was on the parade route, And another thing that could happen with central bank digital currencies is best before dates. Like, you need to use this currency or it's going to evaporate or the coupon is going to expire.
I didn't think about them tracking how you spent your money digitally.
So anybody, they'll do it in Canada as well. You know why? Because, they can. And I'm not saying it's a bad thing.
This is
just
some
more tracking that, but you need to understand there's no cap on that fiat. So the fiat supply is unlimited, as it always has been. And am I able to talk now? Or?
Yeah, I'm just saying this is some 1984 shit, like big time.
Okay, so it is 1984, no question. But let's go back to when fiat actually did carry value and store its value. It was in the early 1900s, like right before 1900. There was a deflationary episode historically where prices actually went down, but real wages went higher. That was when the debt was under control. There actually wasn't taxation at that time. But this was well before you got these spendthrift governments that print money so they get elected for another 4-year term. What we have now, Todd, very simply, is an impossibility to escape the debt spiral, the DEBT spiral. It is 100% certain mathematically that fiat will continue to debase. Now, it doesn't matter whether it's digital fiat or paper fiat, it continues to debase. And that is 100% certain by mathematics, because the economy, the global economy, will never be able to grow fast enough to achieve escape velocity out of the debt spiral. I don't need to describe it any more simply than the gravitational pull of the debt spiral makes it certain that fiat will crash. The United States will be the last fiat currency to crash. Turkey is crashing as we speak, and it's a G20 country. Mm-hmm. And Argentina has crashed 4 times in my lifetime. Holy crap. They've never had a 30-year bond that's matured in my 30-year career of trading risk. What kind of history is that? Yet people still lend them money. I honest to God, I've never seen such stupid lenders in my whole lives. But that's the pressure of money. When you print money, you need to invest it. When you need to invest it in capital projects or countries that are going to fail, you get zombie countries and you get zombie companies. And that's what the Fed has ensured by their scared, oh my God, I got to make sure that nothing fails. This manipulated cost of capital is destroying our futures. But the Fed thinks they're doing things to favor us. No. The people you hurt the most when you print money is the least privileged people. Those are people at the bottom end of the spectrum that don't have any of the hard assets that we mentioned before. They don't own real estate. They don't own any gold, silver, certainly Bitcoin. What do they own? Their life savings is maybe $10,000 and it's held in a bank account that is debasing by at least 14% per year. Did you know if you measured the CPI using the original formula from 1980, the original consumer price index basket in 1980, they just reported 6.2% year over year increase, right? Using a revised formula. If you had used the original 1980 formula, CPI is actually over 15% annualized today. That's criminal. They're robbing from us. Yet, don't forget, we're giving money to people, and I'm going to get elected for another 4 years. Man, it is a disease. Fiat is a disease. Bitcoin is hope. Bitcoin is freedom from central bank disruption and avoiding the creative destruction that is so necessary in a capitalist society.
We mine all of our Bitcoin into a cold storage wallet. Just mine shows up every day. I'm curious, if you were an individual like myself, not our company, how would you hold your Bitcoin?
Well, I do. And so I own Bitcoin in 3 different ways. Firstly, I'm a Canadian, and we have made some really good progress. I was an investor in a company that launched the first Bitcoin ETF. Oh, excuse me. It was a closed-end fund to begin with. It is now an ETF on the Toronto Stock Exchange. Okay, so we allowed Canadian investors to invest in a Bitcoin fund that you could put in a tax-advantaged, what we call RRSP in Canada, registered retirement savings plan, or a tax-free savings account, a TFSA. So you can say things like, not your Bitcoin, or not your keys, not your Bitcoin. Well, when the government's going to fund 50% of your Bitcoin purchase, I'm going to take that. So I own Bitcoin in a Bitcoin ETF. I also own Bitcoin in the US market in something called GBTC, which I surmise you're pretty familiar with.
Of course.
And does offer the best ARB opportunity I've ever seen in my life. Mm-hmm. And I own Bitcoin in cold storage, and I carry Bitcoin on my wallet so I can send it around and send it to Australia and have it settle in 10 minutes and continue to be amazed every time it does when I compare that to going to a bank and jumping through hoops and trying to send money cross border. And that stupid system is held together by baling wire and masking tape, right? It's doomed to fail. And Bitcoin is the solution in all of those ways. So yeah, you hold Bitcoin in cold storage. That's where you should. But if you have an investment portfolio, take advantage in Canada, certainly, of the tax advantage. And if you're in the USA, there's this fund called GBTC, which is a $30 billion fund that trades at a 15% discount to its net asset value. There's $4 billion sitting there for someone to arb out of the market.
I know the
fund. If I was a big fund like CPPIP, Canada's largest pension fund, or CalPERS, dude, I go into the market, I buy 10% of that fund without telling anybody. Then I announce I'm issuer bid at some sort of higher discount to net asset value. Then eventually I own the whole fund. I unwind it. I take all the Bitcoin, I keep it in cold storage. I throw away Grayscale and say, thanks for bringing me a 15% discount. And I take $4 billion out of the market. And maybe if it's only $2 billion, and maybe it's only $450 million before you have to announce that you are issuer bid. But $450 million is still good money from where I come from. So somebody's going to do that, Todd. And maybe it's you, but some smart asset allocator, which there are not that many of in North America, but there are some, is going to do that trade. And they're going to own all the Bitcoin in GBTC at a discount to its net asset value. So I own GBTC as well. Why? I'm a trader. I can't walk past a dollar that's on the street for 80 cents. It's just not in my DNA. I have to take that 80 cents and turn it into a dollar. Here's my little story for you guys. So in 1988, I graduate from Cornell and I come back to Canada. I could have worked on Wall Street, but I come back to Canada and I work directly for the CFO of the Royal Bank of Canada, Canada's largest financial institution. One of my first projects was working on the Latin American debt portfolio, of which every single major money center bank in the world was in the same position as the Royal Bank of Canada. They had made loans to lesser developed countries, primarily Latin America, in US dollars, and these loans defaulted. And so my project was to choose a Brady plan option. Treasury Secretary Nicholas Brady had proposed this to the financial community to rescue the banks. And I didn't know too much about banking, but I did a simple back of the envelope calculation. I said Royal Bank of Canada had about $4 billion in total of LDC debt. The average trading price was 25 cents on the dollar, which means if we were to mark to market our portfolio, we would have to write down the value of the Latin American debt portfolio by $3 billion, right? Doesn't sound like a lot in today's dollars, but it was at the time. Lo and behold, I went to the book value of equity of the Royal Bank of Canada, and it was less than $3 billion. In 1988, the Royal Bank of Canada was insolvent. And I go to the CFO, I say, Emil, we have a problem. And he goes, I know, don't tell anybody. Why do people put their money in commercial banks? Because they are assumed to be too big to fail and they will get bailed out by the government. That is the Fiat Ponzi right there. And since 1988, I've been searching for a solution to the Fiat Ponzi. It took me 30 years to find it, but Bitcoin is that solution. And by the way, I wasn't about to go to the Wall Street Journal as a 26-year-old kid who just graduated with a bunch of school loans and torpedo my financial career by saying that the global financial system was actually insolvent on its way to bankruptcy, but it was. So that is the true nature of the capitalist commercial banking system, levered 25-1, and no one understands it. And this is what we need to change, Todd, because that is the basis of lending money on assets that need to inflate in value because you only hold 4 cents on every dollar as loan loss reserves or equity capital. Okay, that requires you to live in an inflationary environment where assets go up in price over time. Bitcoin is the purest form of pristine collateral that will actually maintain its store of value purely because of its scarcity. No other things required. You're going to redesign banking, and I love you for it.
Jason, I know someone else who worked at the Royal Bank of Canada. You know anybody like that?
That might be me, actually, the Centura division down here in the States.
Okay, so that's, that wasn't a bad acquisition. I would have been in the group that would have done the analysis on that if I had stayed with the Royal Bank of Canada. I actually begged the CFO to buy more Mexican debt at 25 cents on the dollar because I thought it would be such a good value because the world had written it down to a price that didn't make any sense. But guess what a bank typically does? No thanks, Greg. We blew our brains out at 100 cents on the dollar. Why would we buy any more at 25 cents on the dollar, right? I mean, these guys are idiots. They always have been idiots. And we need to disintermediate them out of business or, better still, provide capital to small financials or borrowers that otherwise don't have access to the proper rates to borrow at.
Greg, we could go on forever. It's Friday night. You're in Canada. We're super appreciative of your time.
I loved it as well.
Obviously, you are very smart about this topic, and I love the way you explain it. I think that you'd be great at the conference. I think people could really easily understand your descriptive nature and sort of experiential explanation of how these things are happening to people. I love your advocacy. We're super grateful you're here. I'm sorry there wasn't more time. We definitely have to do this again.
We'll do it again, gentlemen, and I'll do anything I can to help further the cause, right? We're rowing in the same direction. Jason.
I'm going to make it a point if we can get through whatever is – all my friends in New York right now are getting COVID, but I'll make it a point of trying to figure out how to come see you.
There's a lot of time, right? We'll figure it out, or we'll just continue to do it online until we meet in person. But I'm very grateful that I made your acquaintance. It came through the back the back channels, and I'm happy it got to the right person. But Valid as Power is doing some really exciting things. You guys are doing some really exciting things. We are going to be billion-dollar companies, multiple billion-dollar companies, and we're going to be able to change some substantial industries very shortly. So I'm pretty excited about that. So we're on the same team, guys, and that's really important.
Appreciate it.
Yeah.
Greg, thank you so much. Jason, thank you for chiming in here. I wanted to make sure you heard him. I knew that this would be a fascinating interview, and I did not want to take a chance that you didn't get to hear what he had to say. I had followed a bunch of his stuff. I never followed him on Twitter till today, but I've seen him on YouTube and other places, and this is great. I can
Thank you.
I can see, Greg, we're going to be using a lot of your clips for a long time to come on our channel. We got about 2 million followers. We're going to make sure that, Greg, people know who you are. Not that that's relevant, but what's relevant is that your message is so powerful, and we're super appreciative. You have a good Friday. We'll talk to you again soon.
And you too, sir. And we'll talk soon about getting our governments to own $500 billion of Bitcoin, okay?
Hey,
that's what our children need. And if we had a politician with a brain, they would make it happen.
You do know that I think that we should put Bitcoin on our balance sheet, and I'm sure
Yes,
I'm sure you're an advocate for that too. We'll catch up soon.
100%.
No, I'm going to explain to you real quick. We're rolling out. There's a reason for it.
So I did get that right.